to have Jason kick us off. So Jason, you have the floor.
Can you guys hear me okay and see the presentation?
That's
all good? All right. I can't see all of you, so I just want to make sure. Okay. So I will start. So thank you, Gildre, for having me here. Appreciate the time to get us all together. So today I'm going to talk about how to pitch to a VC from a managing partner perspective. I've been involved in the entrepreneurial and investment community for over 20 years. As Brian mentioned, I'm in the Chicago area, but my work expands beyond Chicago, throughout the Midwest, and even global to a certain extent with the different entrepreneurs that I've worked with over the years. So if you have any questions as I go along, as Brian mentioned, put it in the chat. We'll get to it after the presentation. If there's a burning question in the middle, jump in, but mostly wait till the end so we can get through everything. But I want to give you a quick background of, tell you about my story, kind of what led me to launching Propellant Ventures. So a lot of logos here. I won't go through each of these, but I started my business life getting an undergrad at University of Wisconsin-Madison, and I started my career in the real estate and finance world. And this was in the late 90s, early 2000s. So I got caught up in the tech boom, the dot-com boom and bust. And so I started in real estate, but quickly switched after a few years of that to working more in the entrepreneurial space. And one of those particular firms was a company called V Capital that really got me started. At the time, it was called an online matchmaker between investors and entrepreneurs, one of the earliest ones. This was more than 20 years ago. And that's where I got exposed to that world. So I would look at lots of business decks, presentations like many of you have put together if you're entrepreneurs. We'd look at those and in the eye of our investors, and if it was a good fit, then we'd make the introduction. So we had a network of investors, and we got inbound from our website. That was the only piece. It was a marketing site. People would submit things, and then on the back end, we would connect people to investors. So that's where I understood that entrepreneurs need more than just capital. Capital may be a starting conversation, but there's a lot of other needs before that, or even subsequently or at the same time. And so I built was big into building relationships with people, still am today, and I was able to help entrepreneurs with other resources other than just capital. So in that time period, I got my MBA at DePaul University in Chicago. Also took some entrepreneurship classes, got more immersed into it. And then the company that really got me, really accelerated my efforts was Chicagoland Entrepreneurial Center, which was at the time part of the Chicagoland Chamber of Commerce, but they were the main resource in town to help entrepreneurs, high growth entrepreneurs, raise capital, find mentors, and increase sales, generate sales. So, 3 big lifelines of entrepreneurs. And further got involved with raising capital for entrepreneurs, met a lot of investors. And so since that, all these other logos, been on the front line supporting entrepreneurs and helping them build companies, grow, raise capital. I'll just mention a couple other ones here. Founder Institute, some of you may have heard of it. It's a global pre-seed technology accelerator, started out Silicon Valley 14 years ago. I brought it to Chicago when Chicago was in the first 20 cities. Now it's in over 200 regions or cities around the world. It's more virtual now, so it's not necessarily located in cities so much more, but it touches over 200 major cities around the world. And I've been doing it for 12 years in Chicago. We finished our 17th cohort a couple of months ago. We have our 18th cohort starting. And for me, that's my way to support the early stage entrepreneurs, connect them to resources, and help them build their companies. And then I officially got into venture capital 7 years ago at one of the Alumni Ventures funds, which is a network of funds that are tied to alumni of different universities. Bascom Ventures is the one I was at, which is tied to University of Wisconsin alumni, University of Wisconsin alumni. So we built that network. I led all due diligence, source deals, source a little capital. So we did 27 deals the time I was there. And that was an industry stage and geographic agnostic fund. After I left there, I started Propellant Ventures, which is more focused, and it's ties to all my work and my belief in the Midwest. And so we are focused on early seed and pre-seed B2B tech-enabled businesses based in the Midwest. The Midwest region is very good for B2B companies, a lot of disruption happening in these old line industries. And we're some of the first capital professional capital that comes into a company. We usually come in after an angel round before a larger institutional seed round. So we're filling that funding gap that we have here in the Midwest region. So that's what we're doing. We've made 9 investments across 6 companies. We're still evaluating companies, and we'll make more investments. But that's where we're at right now. So today's talk is going to be my perspective of talking to hundreds, if not actually thousands of entrepreneurs that have presented to me over the years, have approached me, have for funding or for other resources. So I'm coming from that perspective. And so I have several slides here that I'm going to go over. One, I'm going to talk about research. Know who you want to talk to, and make sure it's a match for who you want to talk to. So that's important. Second is try to get that introduction. A primary introduction is much better than a cold outreach. So relationships are key no matter, even though there's all this technology and these resources online, you still want to get introductions whenever possible. And then if you're lucky, or if you're able to set up that meeting, and that's where the introduction can help you get that first meeting. You've got to start somewhere, and that's usually a good starting point. And then you have the conversation. So most of the conversations I have, entrepreneurs are presenting their decks. It doesn't always go that way. Some entrepreneurs rather just talk more casually. At some point, I want to see the deck, whether it's before the meeting, during, or right after. So have that ready. Then you want to follow up appropriately with the investor. So if you say you're going to share more information, do it pretty quickly. If you say you want to set, but not, you're going to follow up in a week to set up another meeting, do it, but stick to your word and do what you say you're going to do. And then I'll just provide some other general comments of the way I think you could engage with investors. So, all right, the first one, as I mentioned, is do your research. So I mentioned a little bit before, make sure you understand what type of round you are raising. So are you at the angel stage? Are you at the VC stage? Make sure you understand where you're at. Many entrepreneurs that I talk to are not ready for VC, but some entrepreneurs do this. The media definitely does it. They lump all investor types together. Everyone thinks all kind of funding is venture capital. Not many companies get venture capital. More companies get angel investment. So most of the deals that we invest in, we're investing alongside angels. We do invest alongside VCs, of course, but probably more angels than VCs because we come in earlier than most VCs. So make sure you understand type of investor that you should be talking to. It's okay to talk to some VCs before you're ready, but just know that you're probably not going to get the funding until maybe the next round or until you hit some more milestones. But you want to build those relationships early. And this goes alongside also with the stage, right? Investor type a lot of times goes along with the stage. VCs do, more and more VCs come earlier. So just make sure you understand, that you're talking to an investor that comes at your stage. And you can find this information on their websites, at least the VCs. Angels, not so much. You may find it on Angel List or some other sources if they're listed. You also want to check the geographic focus. As I mentioned, Propellant Ventures is focused on the Midwest. Now, I realize things are virtual, people work remote, but someone still has to be based somewhere. And, it's distributed teams, whatever. So we are very focused on the Midwest. So make sure there are many funds that are focused on certain regions. So make sure that there's a match. If there's not a match, then you're wasting everyone's time. And I get people all the time sending stuff to me, blind emails, and they're based in another country, for example. They're not paying attention to our thesis. Make sure that the industry matches. So if someone's only B2B and, or business model, someone says we only invest in B2B and you're B2C, don't waste that person's time or don't waste your time. Or if we only invest in manufacturing companies and you are an e-commerce company, don't do that. There's no reason to reach out to that investor. Take a look at the portfolio. That also can help you understand the types of companies that the investors invest in. So VCs definitely have it on their sites. Angels, some angels have their own websites to show their deals. You can find maybe on Angel List, but do the research and then look at the team also. You've got to know who you're talking to. So make sure, it looks like a good fit or all around. These are things investors do also when they're evaluating companies. You need to do the same thing as an entrepreneur. You have to be prepared. So you want to make that short list of a few investors to get started. And that's you gotta take the time, build that list so you know it's a good fit. So that's the first thing I want to talk about is just do your research and make that short list of investors. Next is getting that introduction. Leverage your network wherever possible to get that introduction. Now I'm going to go over some of these just to give you some ideas. So these are not any particular order, but getting that warm introduction, no matter what source you use, is the priority here. So LinkedIn is, of course, a tool that a lot of people use. I've met investors that way. Whether I ask for an introduction, you can blindly contact people, and I've gotten through that way before, whether it's investors, entrepreneurs, or other people. So that is a way to do it, but whenever possible, still try to get that introduction. But LinkedIn's a great way to do research on people and then see who you're connected to. A lot of investors do put on their profile that they are investors, so it is a good way to find people. Another tool that I've used is something called Lunch Club. It's also a way to meet people, and you can ask to meet investors, and I've met investors that way as well. But a very good starting point is friends and family. You may not think your friends or family have money to invest, and hopefully they do, or some do. That's a starting point for sure. But either way, ask for introductions. So they want to see you succeed. They want to see you do well. So that's one reason why they may invest, but also they want to make introductions. Those are those warm introductions. So ask friends and family. These are people close to you to ask to get you those warm leads. Also, business acquaintances. So we all have networks. Whether you think you have a network or not, we all have networks, especially if you're in the business world. You've got people in your network. Could be alumni friends, could be just people you work with, people you met, attorneys, attorneys, accountants. Just ask business acquaintances if they know people. Let them know what you're doing. Set up meetings, set up calls, lunches, whatever, to just tell people what you're doing and ask for those introductions. Next, another option is investors, other investors. So if you talk to an investor, it's not a good fit for that investor, ask for an introduction or ask to get your information passed on. I do that frequently. If we're not a fit for an entrepreneur, I'll send it on to another investor and try to get an introduction if I think it's a good fit. So that's pretty common way to find other investors. Investors know investors, so leverage that network where you can. Other entrepreneurs, the fact that you are building companies, if you are an entrepreneur, you know other entrepreneurs, and you probably know entrepreneurs that have raised capital. Ask them for introduction, maybe to some of their investors, or maybe investor they know that wasn't a fit for their company, but maybe be a fit for your company. Service providers, I mentioned before, accountants, lawyers, bankers, CFOs, all those people that are super valuable and important for your company. They know people. These could be business acquaintances, right? But if you're working with them, if you hire an attorney wants you to see you do well. So ask the attorney for an introduction to an investor. Universities, so your alma mater. There are angel groups associated with universities. Sometimes there's funds. There are entrepreneur events, and many universities, top universities, have entrepreneurship majors and centers. So take advantage of that. That worked well for the last fund I was a part of. The universities were, or at least the alumni were, a big part of that network. So to leverage that, commonalities are important. There's accelerators. If you happen to go through an accelerator, most of them have funding. Certain ones don't, but many do. Or if it doesn't, ask those introductions. And so investors are connected to accelerators. So it could be mentors, could be just other people. Maybe there's investor swarms. I've been part of those for accelerators where you meet with the founders. They don't get funding from the program, but you meet with investors. And so that's a possibility. And then communities. So get involved in the entrepreneurial community in your city. There could be big organizations that are doing things, different maybe industries or verticals, but get involved wherever you can, because it's all about introductions, and investors do show up at those things, but you've got to put yourself out there. I know when you're building a company, it's a lot of time you have to dedicate to it, but if you're raising money, you've got to spend the time doing it. So having a co-founder helps. One person spends more time raising money. One person spends more time running the business. So either way, leverage your network. You all have a network, whether you think you do or not. So you've got to get the warm introductions when you can. Now, with that said, you can still find investors without getting those warm introductions. There's a lot of online systems. You can pay for access to databases of investors and, have email templates to send out. But it's better to get the warm introductions. So all the companies we invested in were either people I knew personally or introductions from people in the community. So that, to me, that stands out above all those things. So this is a circular thing, and you can go back and forth amongst all these things, but just keep in mind, introductions are usually the best way to get investors.
And then Jason, quick question for you too, actually, because I know it's kind of related to that last slide as well. A lot of people, right, whether you've, been a startup founder yourself or have friends that have done startups or families, it could be kind of awkward, right? Asking family and friends for money. And I've heard stories from other founders, right? They kind of treat it as, hey, when they tell friends and family, I've heard them say, treat it like a donation, where it's like, there's a good chance you might never see your money back on this, right? But you're kind of helping me out. If I can get you a return, right, I'd be very happy to do that. But, I want to kind of go into this being open-minded so as not to kind of create this bad blood or this kind of, hey, like if, in case it doesn't work out, you get, you're not mad at me, right, for Thanksgiving dinner with the family. What are some tips maybe, or what have you seen in terms of people working with friends and family that kind of helps bridge that almost awkwardness that people see?
Well, to your point, you don't want them to invest too much where if they lose it, they're going to be in financial hardship. So that's why you still should raise some accredited investors, even if they're friends and family. So the people that make $200,000 more a year, $300,000 as a household, or $1 million net worth, make sure that they are accredited, because this is not going to sting as much. But just, they want to see you succeed. Many friends and family only do 10, 15, 25,000. Some do more, but they just want to support you. So as long as you understand they're there to support you, and you let them know, hey, you may not get this money back, but I'll do my best to get your return on this. But you need to sometimes educate them on what this looks like. But yeah, you will still probably have those conversations at Thanksgiving dinners. Your friends and family, especially your family, will still probably bring it up.
Good insight. Yeah, thanks for sharing.
Yeah, absolutely. All right, so of course the goal is to set up that meeting. You've got to get that first meeting. So usually email introductions work, maybe LinkedIn, whatever it is, maybe a phone call. You got to get that first meeting. So it depends if it's angels or VCs. I'm speaking mostly from the VC perspective, but we're also, as I mentioned, we invest at the same time a lot of angels do. So it's a similar kind of conversation. Either way, if you're talking to a VC, make sure you know ahead of time what partner or associate. So depending on the size of the fund, you're probably talking to an associate, a junior associate that's screening you for the first time. Now, if you get that introduction, hopefully you do from a trusted person in your life, that maybe you're getting to someone above the junior associate. So this is more of a decision maker that can give you a quick yes or no, or at least get to the next meeting. So either way, know who you're meeting ahead of time, and maybe more than one person. LinkedIn is a great source to learn about them. Obviously, go on their website as well. But you should have a calendar invite, and then you can see who's connected as well. But again, know who you're meeting, and make sure you understand about what they invest in. So this goes back to that research I mentioned before, but make sure you're prepared and you understand what their thesis is, what they look at, so you can have an informed conversation. And have your deck ready. Some investors may not want to go through that. They just want to have a casual conversation to get to know you. I like to go through those usually. I like to get them ahead of time also, just so I have a record of it, so I can browse through it very quickly, not spend a lot of time on it. And I really usually wait till the entrepreneur presents, but have it ready and be ready to present. 9 out of 10 times, I'm usually listening to a presentation to get started. So if you have a 30-minute call, it should be no more than 10 minutes of a presentation. So, you can maybe plan for 10 minutes and then questions and engagement after that. You should have some thoughts on your terms, even if it's a safe or convertible. I can't tell you how many entrepreneurs I talk to that don't know. They just say, well, we're waiting for a lead to set those terms. I want to know what you are thinking. It doesn't have to be set in stone, but I want to know what you're thinking. You have to come with something. You've got to start somewhere. You have to have a general idea of what you're trying to raise. And most companies don't need a lead investor if it's a safe or convertible. Now, some investors want a lead, so then the entrepreneur has to find that lead. And the lead in this case, they're just agreeing to those terms. It doesn't have to be the largest investor, but if it's a safer convertible, some people would rather just have someone first say, hey, we agree to this, and then everyone else follows. But you want to have thoughts on it. I always ask the question. Some entrepreneurs, they give me ranges. They say, I don't know, I'm waiting for the lead, but I try to get it out of the entrepreneur. What are you thinking? I want to kind of know if we're in the general ballpark, and I'm not holding them to it, but have thoughts on that. You don't have to have the docs ready, but I would actually recommend having the safe convertible or priced round ready to go if you're talking to investors. You want to be prepared. Let investors speak. It's easy to talk about your business, and investors want to hear about it. But if we have questions, let us talk. I remember there was a founder one time giving a presentation. I was on the call as this founder is presenting to investor. Investor came in early and asked questions to engage with this founder. And the founder got flustered and just kept on going with the presentation because this founder was ready to had this in the mind to, hey, let's get through this presentation. But the investor has questions. You don't have to go through everything. That means you're have an engaging conversation. It's more casual. So it's okay if you don't get through it, because that's a good sign. Investors interested. You can always have another meeting to go through it longer, or a longer presentation. Also anticipate questions. So anticipate the questions that investors may ask you. They're going to ask you about your terms. I always ask about, what are the terms? What's your runway? What kind of traction do you have? And that could be product. It could be revenue, could be users. Be ready to answer those questions or anticipate those questions. We're going to ask you about your background. Why is this something, a lot of things that are in the deck, but you just have to be ready to talk about it, your business model, your growth, all these different things. And then also, you definitely want to ask questions also as an entrepreneur. Ask the investor about the thesis, companies invest in, background, all the things that you will probably get asked from the investor. It's perfectly fine. It should go both ways. You're building a relationship. And so investors want to feel comfortable with the founder, and the founder should feel comfortable with the investor. Something called the beer test. Is this someone that you can go out and have a beer with? Doesn't have to be alcohol, but is this someone you could comfortably go out and casually socialize with? So think of it that way as well. So become prepared for the meeting. If you're not prepared, it shows. And I've had lots of calls where entrepreneurs are just not prepared. They don't even know about our company or what we invest in. So easy. VCs all have their information out there now. So just come prepared. Otherwise, you're not going to look very good. Okay. Any questions on that, Brian?
No, I think at some point, I know we've only got about 20 minutes left, so okay, we'll wait to the end. But I would love to hear, and I'm sure some people would hear, maybe any horror stories or some of the worst pitches maybe you've seen throughout the years. Okay. But we can save that for the end too. Yeah,
I'll go through my next couple slides quicker. All right, so presenting the deck. This is also, anyone that's raising money should present a deck. So telling a story is super important. You don't need to bog us down with a lot of text. Keep it very high level with graphics, little text, simple slides, maybe 10, 12 slides. You don't have to go through everything. Key things that we like to know is the team. Why are you the right team? At the early stage that we come in, the team is the most important. Do you have any early traction, users, LOIs, revenue, partnerships? Do you have any partnerships or anything like that could make you stand out? As I mentioned before, talk about the raise. If it's not in your deck, tell us what it is. Some entrepreneurs don't put it in there because they're, maybe they don't want to be shared publicly, and you have to be careful about that. But be ready to mention the raise. I like it in the deck. And at the end of the call, ask about their interests. You're always selling to a certain extent, but just gauge the investor's interest. Is this something that fits what you're looking for? And you'll get an indication pretty quickly if, you could have another conversation. So ask for the next step. Can we have another conversation? Can I send you more information? So the goal is to get to the next meeting. That is the key here. So you don't have to tell the investor everything in this first meeting, but pique the interest to want to get to the next meeting. All right, so then there's follow-up. So get permission, but ask if you can add the investor to your update email or your newsletter. That's a great way to stay top of mind, and you should have that. So you should be sending those out monthly or probably monthly, I think, at this stage if you're early. And that's a good thing to do. And contact the investor if you haven't heard in a week or 2 weeks after. Share articles, any thought leadership stuff that you've written or you're a part of or you're hosting. Stay top of mind. You want to be remembered by the investor, especially if it further validates your expertise. Make introductions or ask for introductions. If you come across another opportunity or a person that may be a good fit for this person, make those introductions. And then, of course, set up another meeting. Try to set up another meeting shortly after that meeting. If you can do it at the end of that call, great. If not, you want to have a next step either way. So it's a sales one-on-one, 101 type of activity, but you want to have that next meeting set up. So stay engaged and stay top of mind. And then just the last thing I'll say is, some general comments. Have a good demeanor. Don't be cocky. I've had plenty of calls where entrepreneurs are overly confident. It comes across as arrogant, and I can't wait to get off that call, and I'm not going to have another conversation. I will not introduce that founder to anyone else. Be resilient. So in the downturn times like we've had over the last few years, you want to show that you can persist and move past it. And I'm not saying it's easy. Maybe you change your business model. Maybe you change your target audience, but show resilience if you've had to go through that. Be coachable. Be open to getting guidance or getting, as I said, coaching from investors. Investors want to help. And so be open to that. You want to build trust with that investors. That takes time, but you want to build the trust. Be prepared for all your conversations. Demonstrate that you're resourceful. One of our companies we invested in bootstrapped to a few million in revenue before they ever raised capital. And that to me was pretty impressive. And so be resourceful wherever you can. And then show an interest in the investor. Investors are people just like you. Just show an interest. We are normal people. Obviously, we have capital if you're looking for capital, but the fact is, people are people. Just treat people with respect, and you'll get that back. So, but you're building relationships either way. So that is the key here. Raising capital is about building relationships, and people want to do business with people that they like. So that is what I had, and I'm happy to follow up with anyone later. Here's my contact information, but I'm sure this will be shared later. So I'm going to end there and see if anyone has any questions.
Yeah, thanks, Jason. And I think so. A couple of questions that people who couldn't make it also sent in. So I'll ask those, and anyone else obviously on the call, please feel free to type it in the chat. You can also, want to make this collaborative, so feel free to unmute and share. But kind of the first question is, given the way that crowdfunding and a lot of these other types of services have come into the landscape, how has that affected the traditional way of founders raising rounds? And as an investor standpoint, right? Let's say you see a company that's raised maybe 5 million through a kind of crowdfunding option, and now they're looking to raise a Series A. Is that different than if they raised it through traditional institutional investors? Or how do you view that from the VC side?
Yeah, so we haven't looked at a lot of companies that have raised crowdfunding, but that's pretty common for physical products if you're doing traditional like Kickstarter, but there's obviously equity crowdfunding, and a lot of entrepreneurs do that. So it's generally a different round. Some entrepreneurs do it at the same time, but usually it's a different terms. So you just have to be very clear on that. Some investors won't invest in a company if they're doing a crowdfunding round at the same time, so it really just depends. But thing about crowdfunding is they've increased, at least in the US, they've increased the amount of money. I think it's up to 5 million now you can raise through crowdfunding. So that's less of a, you don't have to rely on VCs to get that amount of capital. Well, but the caveat is you still have to market yourself. I mean, if you build it, doesn't mean they're going to come. So 70% of crowdfunding successful crowdfunding happens from the entrepreneur marketing the deal to investors. So you put it on a platform doesn't mean you're going to find investors. So it's another avenue for sure. The good thing, you want to make sure you use a platform that you have one line item and not like 50 different investors small investors, because you don't want to have to deal with that. So it's an option out there for sure, but it's still not easy to raise regardless. But it's an option. But I would do it separately than a traditional raise.
Awesome. And then I see a question from Chris. Are investors looking for, more kind of confident personalities and founders, or like a little more passive, I guess, in that sense, just like kind of grinded out hard worker? Like what kind of is the ideal founder personality that you'd like to invest in?
Yeah, it probably depends for each investor, but I mentioned earlier that someone that's sometimes they may come across overly confident or maybe comes across as arrogant. That's not a good personality for me, and I don't think a lot of investors probably would like that either. But confidence is good. You want to feel that you need to feel that this person or this team can actually execute and overcome some of the challenges. So you want someone that is definitely confident. If someone uses words like maybe and I don't know, that just doesn't make you feel confident in the person. So be definitive, even if you don't know some of those answers, be definitive, because things change. No one's holding you 100% to what you say, but we want to make sure you have a plan. So, I mean, you want to show your personality for sure. If you are someone that is arrogant and that's how you come across, so be it. You may still find an investor, but it may be few and far between. So I would taper it down a little bit, but I do want confident founders for sure.
Great. And then I think as part of that, maybe almost a follow-up. So I think earlier someone had asked, or I'd asked, okay, like what are some kind of, not necessarily horror stories, but I actually want to take the flip side, right? What were, from the investments you made either at Propellant or your previous companies, was there like a pitch that really stood out, or maybe some that like, wow, like, I want to write a check in this room during this meeting, where like it was whether it was a metric, whether it was part of the TAM, maybe it was just the personality of the founder, something that really kind of caught your eye during that meeting?
Yeah, I'm thinking of one of our investors or one of our investments. I mentioned this company had bootstrapped, had a few million revenue before they ever raised capital. So very resourceful, a pretty smart founding team. They first-time founders. We do invest in first-time founders, but they knew the industry. They worked in the industry, and they had the relationships to get started. And so, their first round was a priced round because they had been able to, get all that, generate revenue. I mean, generate revenue is the best form of capital. So that particular still is a good founding team, domain experts, very resourceful. So that's one, right? And then the other is seasoned entrepreneur. We've invested in several entrepreneurs that have built and sold multiple companies, and that gets you excited as well because they've proven that they can execute and they're an operator. Doesn't mean their next business is going to be as successful, but at least it mitigates some of the risk. But it's okay if you're a first-time founder. We invest in first-time founders, but we look for some, as I said, domain expertise. Or if you don't have the domain expertise, maybe you have someone on your team that does. Maybe a board member, maybe a part-time employee, maybe a co-founder. But so we've looked at, it's multiple things like that, but the team is the most important. So the team to me stands out the most when we come in that early. Now, some investors have certain industries and verticals that they want to focus on. So if you we had a couple that we were looking at the time, and those companies fit what we were looking for. So that also helps.
Great. And maybe, I'm not sure if you know the exact recommendations on this, but Chris is asking, so what are some of the best or more popular crowdfunding sites? I know just from WeFunder and Start Engine are kind of the more popular ones that we've seen founders also raise on, but personally, I don't have the experience of that. I'm not sure if Jason or you have any
Also, guys,
suggestions.
for questions too, feel free to raise your hands and you guys can ask them. We want to make this as interactive as possible.
Yeah, it's, there's obviously Indiegogo does some equity crowdfunding now, but I'd say, WeFunder is one I see a lot. There's another one, Seed. I forgot now, Seed something. I think Circle bought them. Forgot what it's
Seed
called.
Invest or
Yes, thank you, Seed Invest. And there's so many out there that, but I don't pay attention as much to those because, I'm talking to entrepreneurs that are raising from more traditional means. And I'm not saying crowdfunding is not an effort at all. It's something you shouldn't pursue, but it's, depending on the platform, you can hire people to help you put together a good video, which I recommend doing. I don't know if you have videos on Seed Invest, obviously Kickstarter, you have videos, and software businesses don't generally raise from Kickstarter. So the equity crowdfunding is probably a better bet. So I don't know if people do videos on those. I'm not sure. But.
Okay. And then question from Tanho here. So what's the best approach for maybe a pre-revenue business, right? Kind of in that earlier stage pre-seed round to, raise funds, or how would they interact with potential investors at that stage?
Well, there's different stages. So there's obviously bootstrapping, your own capital. Friends and family is a starting point. I realize some people may not have friends and family that have the wherewithal. The average angel investment is $25,000 US. So it's not a lot. So, think about, is there someone in your network, close to you that can invest that kind of money? Even if they do 10 or 15,000, that's a starting point. They want to see you succeed. So starting with friends and family, but going beyond that, get introductions where you can, but go to events, go to entrepreneur events. Investors do show up at those things, so you can meet people there. Go to pitch events. A lot of stuff is virtual these days, but go to in-person events if you can. Look for founder happy hours in your city. If you don't see it, host your own. You can get the word out to through LinkedIn or Facebook or other means in your community to get people there. So you've got to start somewhere. I started doing my own events 20 years ago, and it's been, I went to a lot of events first of all, and then I started doing my own, and that's one way to build the network. And it just takes time, but it's an everyday process, put it that way.
Awesome. And I think, Chris, I saw you had your hand raised. Do you have another question for Jason?
Sorry, it was an accident, but I'll think of a question. Is it effective cold calling venture capital firms and investors? If you just cold call them?
Cold call with a phone call or an email?
Like a phone call.
Well, if you can get their phone number, good luck. But that's almost like a spam call a little bit. I would get that introduction. I'd rather have you email me than call me. Most people don't pick up the phone anymore unless they know who it is. I'm so used to having phone calls when it's on my calendar, so I know what's going to happen. I don't pick up the phone very often anymore. If I see who it is, and maybe I'm in between meetings, but it's better email or LinkedIn. Not everyone responds to LinkedIn, but I wouldn't cold call. Very few people are going to pick up the phone. Now, those of you in sales, this is a sales process. Maybe you have done that before, but at the investors, it's a very relationship-driven process, and usually you send information before you talk to the person also. But hey, if you're good at that, and you can try it, but it probably won't get you too far. Maybe you get a couple calls out of it.
Awesome. Any other questions anyone has?
I have a quick question, Jason. I just listened to our most recent episode of the Spotlight podcast with Melissa Kwan, and she mentioned that 1% of businesses are actually funded, like venture funded businesses. The other 99% of businesses and startups are bootstrapped. Why do you think there's so much glorification in funding when only 1% of those businesses are actually fundraising?
So are you saying they get VC funding, or they're just fundraising in general, whatever that may be, the 1%? Is that what she said?
1%, yeah. I think and Brian, you can correct me if I'm wrong. I think she said investment in general.
That will actively receive a VC investment. So, of that 99%, not everyone will always be looking to raise, but of the active kind of startups in that space, only 1% capture a VC investment.
Yeah, VC investment is really hard to get to. You have to start somewhere. So bootstrapping, friends and family, angels, but very few actually get VC investment. And that's the glorification in the media, as I mentioned earlier. The media lumps everything together. I talk to founders that don't really, or even people not in the industry, they lump all that conversation to me. They think it's all VC, which is not. But raising money, bootstrapping is obviously, getting to revenue is key. I mean, that's the best form of capital. And so it's not as expensive anymore to get to that initial revenue. So the further along you can get, the better. And most companies aren't backable by traditional investors. So if you've got to have a high growth business, that's why a lot of investors focus on software businesses, because it's more highly scalable, costs go down, but there's still plenty that look at physical products, food products, but it's not easy, and a lot of people don't know how to leverage the network to find the investors either.
Awesome. Any other final questions that we have? I know we've got a little bit of time here, so I just want to make sure. Otherwise, we'll send out a recap of the call, as well as how to get in touch with Jason. So Jason, appreciate you sharing your LinkedIn and your email on the slide. Tell us kind of as the final thought here, what's Propellant's, thesis, right? I know you guys are kind of more B2B focused within the Midwest, but kind of as the closing thoughts, right? What does Propellant look at, and best ways to get in touch with you?
Yeah, we're looking for early stage entrepreneurs. We'd like to see a little revenue. It doesn't have to be a lot, but we like to see a little proof of concept in the market. We want to see that you're focused on, B2B business model, tech enabled. Ideally, we could do, we could do hardware, software, but so far we've done all pure software businesses. Someone on the team, ideally the management team or the founder, we would like to be based in the Midwest. Do know there's distributed workforces out there, but someone has to be located somewhere. And part of the reason we like the Midwest is because their valuations are more reasonable. We like to come in at 10 million and below, whether it's a valuation cap or a pre-money valuation. So during this crazy market we've had, a lot of those larger valuations have been pushed down. Midwest is still pretty stable. I mean, some people have had to lower them if they're a little too high, but for the most part, it's been pretty even keel during this ups and downs. So, but we're always looking to meet good founders, good companies, solving obviously innovative, or having innovative solutions, just like any VC would, I guess. But you're welcome to reach out to me on LinkedIn, send me an email. Happy to talk to you about your company. And someone asked about biotech. We don't really do. I've invested in that in the past in my last fund. We haven't really looked at it at this point. I'll never say never, but we haven't focused on that. We do like health tech, digital healthcare, could be med tech. But we haven't looked at stuff that need to go through clinical trials at this point. But I do like some of those things. I've made those investments in the past.
Just curious, Jason, what industries do you think are trending in, I guess, like the next 5 years?
Well, I'll tell you first what we've looked at, and then some of those still are probably in that. So, we launched during the pandemic, and so at the time we saw certain industries that were accelerating their innovation, their adoption of technology. And so we initially focused on health tech, fintech, ed tech, supply chain, future work. Now, obviously, since pandemic started, every industry was impacted and had to adopt technology quicker than they normally would. And so we look at all kinds of things, but those are some of the initial ones. We also look at real estate tech or prop tech. And in terms of the industries that are growing, I think, some of the ones you probably heard about, anything that has to do with AI, right? That's everywhere. But I would say as a founder, you want to have some plan at some point, or at least thinking about how do you bring AI or generative AI into your business? Because a lot of investors want to see if you have a plan to integrate that somehow, even if it's not the core to your business, but is there something that you're leveraging with AI? So AI, of course, I'd say HR tech is growing a lot, making sure employees are effective and efficient. And so I've seen a bunch of those types of things. And some of that's been around the coaching and mentoring actually of employees. I've seen some companies in the Chicago area doing that seems to be growing a little bit. Health and wellness is something that's been out there for a while, but definitely more front and center because of pandemic. And I know we're still reeling from that, and the fact is a lot of these things are still very apparent. So health and wellness, but any digital healthcare is still going to be big for sure. I mean, that's been big for a long time, but I'd say also ed tech and fintech, those continue to be growing. So we're doing a space tech discussion next week, and I think space tech is also growing too for people. So
awesome. Well, maybe we'll all be on a rocket ship one day doing the fun trip to the moon or out to the atmosphere. But excited for feel free to share. We'll send a recap email as well with the invitation to Jason's space tech panel coming up. But thank you everyone for joining our conversation here today. Obviously, thank you, Jason, for sharing your insights, and we'll make sure that the recording as well of this is sent out. If you have any questions, please feel free to reach out. Jason's just shared his email, so thank you for that, and hope everyone has a great rest of the week. Thanks again.
And one last thing I'll say, if you do reach out to me on LinkedIn, remind me that you met me here so I know. I would say anyone you reach out to on LinkedIn, qualify. Don't just do a blind request to connect. I get those all the time. So just a piece of advice, but do that for me. If you reach out to me, I'm happy to connect with you, but thank you for your time as well.
Awesome.
Thank you
all
so
right.
much.
Thanks, everyone.